Hi, I'm Brian Sponheimer, and I'm joined by my colleague on our auto team, Carolina Jolly, with some takeaways from our 47th annual Automotive Symposium, held recently in Las Vegas. Featuring over 20 leading automotive and aftermarket companies, the conference offered unique insights into the current state of the automotive ecosystem. Though challenges regarding near-term issues related to inflation, interest rates, labor, and geopolitical tensions were topical in Las Vegas, our fireside chats overwhelmingly focused on the longer-term prospects for the auto industry, most notably in the opportunities ahead as electric penetration continues to rise.
To start, the $390 billion automotive aftermarket is resilient. As expected, aftermarket parts retailers and distributors have been well positioned to pass along rising input costs due to the less discretionary nature of the business. And as new technologies enter the aftermarket, or those vehicles 6 years or older, companies that have invested in distribution, technology, and data appear to be taking share from those that have not or cannot. These companies will benefit from the continued consolidation of the market, while others will lose out.
Presenting suppliers and dealers noted that vehicle electrification continues to be an automotive market inevitability, albeit one with a less certain path. Despite considerable government incentives on a global basis to drive EV adoption, concerns about affordability combined with range anxiety and residual value unknowns have led to deceleration in demand that has led to some original equipment manufacturers pushing out battery and assembly plant capital expenditures.
While presenters spoke to some improvements in semiconductor chip availability and logistics, problems still persist across both the original equipment and aftermarket supply base, to such a degree that production and shipping predictability remains incredibly difficult. As a result, low inventory, a factor that has contributed to help dealers reach all-time high in per-unit gross profit, will likely persist and keep the status quo for longer than anticipated.
Rising interest rates and vehicle prices, declining used vehicle prices, and a reduction in the availability of leasing and 0% financing all have the potential to cap upside in new vehicle sales in the near term, as affordability continues to be pressured. In time, however, we do expect new vehicle sales to reach the 16.5 to 17 million unit level that the industry sat at for the better part of a decade prior to 2019. Thank you for your time. If you have any questions, please contact any member of the Gabelli Automotive team.